So, when it comes to investing, what really separates the amateurs from the true champions? Well, today we're digging into the core principles from Mark Minervini's Market Wizards, and you're about to see how the secret to huge returns isn't about some magic stock picking formula, but about building rock solid discipline.
All right, let's kick things off with a really fundamental question. Because before we can figure out how to win, we first have to understand why so many people lose. And I'll tell you, the answer probably isn't what you think it is.
So, what is it? Is it just bad luck, or is the market just too complex, too unpredictable? Maybe it's about getting bad stock tips from a friend. Well, yeah, those things don't help, but the real root of the problem, it's actually a lot closer to home.
Here's the core idea from the book. Your biggest opponent isn't the market. It's the person looking back at you in the mirror. It's our own emotions, that fear when a stock drops, the greed when it's soaring, or that dangerous hope that a bad trade will magically turn around. That's what really messes up our plans and turns wins into losses. Okay, so if our emotions are the real enemy, let's take a look at someone who totally mastered them. Mark Minervini. Honestly, his story is the perfect example of how to win this internal fight. The thing about Minervini is he wasn't born some kind of investing genius. He started out just like the rest of us. His entire journey is just powerful proof of how pure dedication and, most importantly, the right mindset can build a world-class approach to the markets. Get this, a 220% average annual return over 5 years in a row. That is not a lucky streak. That kind of insane consistency tells you there's something much deeper going on. There's a repeatable, finely tuned system at work. So how did he actually do it?
And this is just so important. This isn't some abstract theory from a guy in an ivory tower. Minervini's unbelievable track record is the ultimate proof that his methods are battle-tested in the real world. They work, and they work incredibly well when you apply them with discipline.
So, what was his secret sauce? And more importantly, how can you start using it? Well, the answer doesn't begin with a stock chart. It starts inside your own head.
Minervini's big argument is that most investors lose simply because they react with their feelings. You know, they buy a stock at its absolute peak because they have a fear of missing out, or they panic and sell everything during a totally normal market dip. They let hope drive their decisions, not a clear, cold, objective plan.
And this right here is this central idea. You have got to stop treating investing like it's a trip to Vegas. Instead, start thinking of it like a high-performance sport. It takes hard training, serious preparation, and absolute emotional control if you want to win again and again. A winning mindset is the foundation, for sure, but you also need a system you can actually use to execute. Minervini didn't just think differently, he acted differently. And he did it using a very specific framework he developed called SEPA. You can think of SEPA as his secret weapon. It's this whole system he designed to methodically find the best growth stocks out there and, this is the key part, to take emotion completely out of the equation when it's time to buy or sell.
SEPA really comes down to these three things. First, you're on the hunt for the absolute best companies, the ones showing explosive growth. Second, you don't just buy whenever you feel like it. You wait, patiently, for that perfect moment when a stock breaks out, which signals it's ready to move higher. And third, and this is the most critical pillar of all, you protect your money. You have to control risk with strict, unbreakable rules.
But here's the thing, a brilliant system like SEPA is totally useless if you don't have the discipline to follow the rules, especially when things get choppy and the market gets tough. This slide pretty much says it all, doesn't it? The amateurs, they hope. They average down on a losing stock, hoping it'll come back. The professional, they cut that loss immediately and move on. Amateurs try to be heroes, catching a falling knife. Professionals buy stocks that are already showing strength. You can't control the market, that's a fact. But what you can always control are your own actions. And that control is what separates the pros from everybody else.
Okay, so let's boil this entire philosophy down into three practical, really powerful rules that you can actually start applying to your own investing, like today.
First, stop trying to buy stocks that are in a nosedive. Instead, buy companies that are already winning. Second, focus your money on a few truly fantastic businesses instead of spreading it thin across a random bunch of tips. And finally, and this is the big one, accept that your success comes from disciplined execution, cutting your losses small and letting your winners run, not from trying to predict the future. So, in the end, the challenge the book lays out is pretty simple. Are you going to keep being a passive participant, getting pushed around by market noise and your own emotions? Or are you ready to put in the work, to train like a champion, and to actually take control of your financial future? As always, that choice is up to you.